All right, guys, back to work tonight. Hope you guys had a fantastic day. Boy, what a move out there today. You know, these melt-up markets that we're seeing right now, they can be a bit tricky. So we have got a very important video tonight. And boy, I've got some great trades I'm tracking for tomorrow. If you watched last night's video, I know a lot of you guys did well on those bear traps during that melt-up today. So well done on that. If you watched last night's video, you probably know what we're looking for tomorrow. But if you didn't, not to worry. I'm going to go over all my favorite trades in the video here tonight. That we have a game plan to make some moolah on Friday. Now, a lot to cover in a very important video. These melt-up markets are not easy, but I'm going to give you a great roadmap for tomorrow. Before we jump in, though, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And if you enjoy this stuff, if you like these videos, do me a favor, as always. Hit that like button for me and give me a holler, give me a shout out in the comment section below. Either way, thank you so much for stopping by, tuning in, supporting the channel. But enough of the intro. Let's get ready for what should be a very good Friday as we kick off earnings season tomorrow morning. Now, looking at the S&P and the SPY and the Nasdaq and the QQQs, everything is bullish on the Nasdaq and the S&P right now. Anytime we see a real strong move like this, we're always expecting a deep pullback, right? And a retest of that high. Deep pullback and retest of that high. Now, these melt-up markets, sometimes they get stuck in ranges up here. So I definitely want to make sure you guys are prepared to profit off a choppy sideways range. That's one of the scenarios we'll talk about here for tomorrow, a very important one for tomorrow. And also, too, you know, whenever we see these big kind of melt-up markets, we oftentimes see some very sharp corrections because buyers are not going to want to buy high, right? We've had kind of a FOMO move, a melt-up move so far. So we have to anticipate some very sharp corrections, basically to allow buyers to buy nice and low tomorrow. Now, I definitely think there's potentially some money to make on the way lower. Now, remember, bull market like this, if we learned one thing from the last couple days, we got to be careful trying to short a bull market like this. There are two types of short setups, reversal setups, we'll talk about tonight. That way, if we do get those reversals, you guys have the game plan to capitalize on the pullback. So if we get what we want for tomorrow, there's money to make on the way down and money to make as the buyers buy the dips on the way back up. So lots of trades we're tracking, not just for tomorrow, but into next week. So not to worry. We're gonna go over all the details here right now. Now, before we do that, before we jump in and talk about my favorite trade setups for tomorrow, let's all get on the same page here because there are three things you want to be aware of here for tomorrow. First things first is news. News we have, of course, at 10 o'clock Eastern time. I wouldn't worry about that import-export number at 8:30 Eastern time. The big news that we know about tomorrow, the big market catalyst, will likely be around that 10 o'clock consumer sentiment number. So if you only had an hour to be trading tomorrow, I would make sure you're at your desk and paying attention around that 10 o'clock to 11 o'clock block tomorrow morning. The second thing that you want to keep on your radar for tomorrow is kind of the official beginning of earnings season. Over the next 3 weeks, we'll be hearing from the biggest corporations around the planet on the Nasdaq and the S&P. Now, tomorrow, we kick things off with the big banks, right? You probably recognize some of these names: JP Morgan Chase, Citigroup, Wells Fargo, BlackRock, right? We know these numbers. Now, historically, these banks are not going to give us that much volatility when they report their earnings before the open. However, you may recall a few months ago, everyone thought the banking world was coming to an end. It'll be interesting to see tomorrow, and again, we historically don't see a lot of action off I call them the boring banks in our trade room, but I will definitely be keeping an eye tomorrow morning. They'll be reporting earnings, usually somewhere between 5 a.m. and 7 a.m. Eastern time tomorrow. That's definitely a big variable for tomorrow. Now, next week, we'll talk a lot more about earnings because we have some of the biggest names in the world are reporting corporate earnings next week. So the next couple of weeks here, the month of July should heat right up for us. next few weeks. So that is the second thing I'm watching for tomorrow. Again, historically, probably not going to see that much action off it, but with that little mini banking crisis that we saw a month and a half ago or so, it will definitely be something I'll be watching to see if that surprises the market. And the third thing on my mind for tomorrow is mindset. Tomorrow's a Friday. Now, a summertime Friday, the months of July and August, Fridays are historically going to be a smaller window of opportunity. My mindset on a Friday is to get into trades as early as I can. And we know that Fridays tend to get a bit lower volume. The markets get a bit illiquid into Friday afternoon. So I always try to get into stuff early when the price action is good, liquidity is good, and try to hold a small position, ideally if I can, into the close on Friday afternoon. If you've been trading for a while, been watching my videos for a few months, you know that Friday afternoons, they love to kind of run and run and run. So you can oftentimes get some really good setups and make some pretty good money on a Friday, again, Friday morning, but holding into it into Friday afternoon. All right, guys, so consumer sentiment number at 10 o'clock Eastern time. Will the banks, will they surprise us tomorrow morning and lead us shape some volatility overnight? And again, early in tomorrow. And I try to leave that runner into the close on Friday. All right, back to our charts now because, obviously the money is made on the charts. And if you like making money, I would definitely make sure you watch the entire video tonight because I will talk about different trade ideas that you can use to make some consistent profit across all of these markets, whichever market you're trading here tomorrow. Let's go S&P first, right? We'll go Nasdaq second. As I mentioned before, we have a very strong run higher right now, and we're kind of anticipating two scenarios, right? One is that sharp pullback where, again, I believe there's potentially some money to make on the way down, and everybody wants to load the boat, buying off support levels for a retest of that high. We know that now. Now let's drill down here right now to our tick chart. We trade off tick charts in our trade room. Everything is easier with tick charts, if you want my opinion. This is a 7,000 tick chart you can see in the upper left hand corner, and that's also the 21 EMA if you're tuning in and watching for the first time right now. Now, what do we see right now on the S&P on the tick chart? We have there's probably two different components that you want to be aware of. One is the strength of that move. Anytime we see a strong move in one direction, we expect a pullback and a retest of that level. Now, I mentioned earlier in the video that if you watched last night's video, you probably know what I'm going to say next. The second thing is that range. Here we have a strong run up into a trading range and a breakout. Now, remember, like I mentioned last night and the night before that, ranges love to what? They love to break out and pull back roughly about, right, the top, in this case, the top of that trading range. That's a very significant clue. And at the same time, right, as I mentioned on the 60-minute, because we have this kind of melt up market right now, we definitely want to be prepared that that breakout pullback will be great, but we got to be prepared for the potential for a very sharp correction, and don't let that sharp correction fool you because it will probably get bought right back up, right, for a retest of that high. So those are the scenarios we're looking at here now on the faster, the tradable, the tick chart. All right. So now that we know kind of the overall conditions here of the market, let's talk about some setups we can use to actually make some money on this. Now, first things first, we have to anticipate the range. Okay, the range is very, very likely after a big melt up market like this. Now, in my trade room and also in my free trading classes, I talk about that if we want to buy high, right? Ideally, we want to buy nice and low right now because we have to assume that that's where the buyers are, right? That's where the big money buyers are. They're waiting for that big correction to load the boat and back up and retest the high. So if I want to buy, for example, if I want to buy a shallow pullback, right? Let's say off the top of that trading range around the low of that channel. If I want to buy that shallow pullback, I'm going to need to use what we call a trap pattern. Trap patterns, which you guys learn in the free trading course, trap patterns are going to allow me to buy relatively high, right? And you'll notice how this pattern lays out. The bears try once, we go higher, the bears try twice, and we're looking for a signal closing above the moving average for a retest of that high. This realistically could be the beginning of that trading range. Now, I'm going to talk later on in the video, we'll talk about how to short off that high. A double top reversal is certainly on my radar here for tomorrow, and we'll talk about that as we go deeper into the lesson. But again, just like I talk about in our free trading classes, a bear trap is going to be kind of my favorite way to grab that breakout pullback, right? That's one thing I'm watching here for tomorrow. Now, what is really probably the more ideal situation is to get a sharper pullback. Now, just be aware, these sharp pullbacks, they oftentimes have two legs to them. If you're a student of mine, I call these 1, 2, 3 moves. All right. If you're a student of mine in our trade room, the phrase 1, 2, 3 move, you'll know exactly what that means. But these sharper corrections, they usually have two legs to them, and they usually go a little bit further than a measured move, right? So, we're looking for a relatively sharp pullback. Now, if I can get that sharp pullback, and again, later in the video, I'm going to talk about how to short this sharp pullback. I'll give you guys a game plan on that. Don't you worry about that. We'll cover that in a moment. But if I get a sharp pullback, what happens is yes, I want to be a buyer down here, but the reality is that momentum will turn over. This will feel quite bearish as we go lower, and hopefully we can use what we call a failure into pullback combination. In other words, we'll wait for the sellers to try a couple times down here. Now, just be aware, right? Like I said, there'll usually be two legs to it. I'm anticipating somewhere right around here right now, but it may be even deeper than that. Bottom line is, once we get kind of that 1, 2, 3 move, that sharp pullback we all hope for right now, momentum now shifts in the short term to the bear side. We have to respect those bears and then let them try a couple times. I'm not a big fan of picking bottoms, right? Picking bottoms is for rookies, right? It's very difficult to tell how far that pullback can go. So rather than trying to pick the bottom, I'll wait for these bears to try a couple times and then think about where their stops are, right? And use their stops as fuel for basically a reversal going back up to retest the high, okay? Now, these failure patterns often turn into what we call pullback combinations, which means once those bears get squeezed and the market begins to roll higher, we can oftentimes draw a trend line off the highs, bring it down off that low, look left, find some prior swings, and then grab that first pullback off the low. We call these failure patterns, right? Below the moving average, around support levels below us, into a pullback combination. This could be a trap pattern. It could be a pullback setup. It could also be a failure pattern. Any of those entry patterns you guys are learning in our free trading course. Now, that reminds me, I'm going to be talking a lot more about failures, traps, combination setups. If you're not making consistent money right now, you need to learn these setups. I teach these in our free trading classes. I'll put a link up there for you. If you haven't taken the free classes yet, I'll put a link up there for you in the upper right hand corner. Grab that link, take that free trading course if you haven't done so already, because the strategy I teach in that short video series will show you a simple trick we use in our trade room to know where the best winning trades are going to be each day. And I'll teach you 4 of my favorite entry setups to help you get some edge in the market and help kickstart you making money consistently. If you're missing the best trades right now, if you're not getting the results you want, grab the link that popped up there, take that free course. You will love it. And also keep in mind too, I'm going to put all the important links tonight down in the description of the YouTube video. So for some reason you can't grab the little pop-up there, I'll put all the links down below. Grab that class, learn those setups. You can thank me later for that. You'll love that free class. So those are three out of the four different ways I think we can buy this thing right as it goes. The first one is that, again, shallow pullback, buy as low as you can. As we always say in these videos, shallow pullback, traps, baby, right? On the deeper correction, again, think about a measured move that will overshoot the measured move a little bit, right? If you're a student of mine, you know what to look for. Again, trap those bears in, right? Trap those bears in. Use their stops as fuel. Pop up, failure into pullback combination, and we're trying to go back up to retest the high. One more variation I want to talk about on this, and that is a V bottom. You know, it's been a very big move over the past couple days here. It would not surprise me at all if we saw so many buyers down here. This thing just V bottoms and goes right back up again. Okay, this happens all the time. Now, if we do get that V bottom, here is what you want to look for. If it V bottoms off of that low, remember, it won't give you a good signal, right? It won't give you the bears wants, you know what I mean? It won't give you the chance to trap those bears in and use their stops. So if it does V bottom off of that low, what you want to do is, first of all, is don't chase it as it goes higher, because all the big lot buyers who bought that deep pullback, they're going to be scaling out of their positions once we start running into some swing levels up overhead. So you don't want to chase it. The trick here is go out and mark the low of that first pullback and then look for that bear trap to get in from there. These can be tricky, right? These can be tricky. These can, you know, that little voice in your head will be saying, get in, you're going to miss it. But oftentimes what will happen is it will pop up, it'll begin to grind higher here, and right when you go, okay, I'll get in, right when you get in, that's the minute now it'll correct, and you'll be wishing you would have waited for that trap below one of these swings, right? If we're really lucky, it'll be a channel off that high, off of that low, right? That's the best way to buy it if we don't get that signal off the low, right? Hopefully that makes sense, right? So those are four different variations of how I'd like to buy the dip here off of that melt up we've seen over the past couple days. Now, let's talk about the short side, right? Because the short side, obviously, and the range, right? What if the market goes sideways here overnight? Or what if we end up getting a sideways range tomorrow morning? Let's talk about that more. Let's move now from the S&P and the SPY over to the Nasdaq. These are almost identical markets, as you can see. Again, the key component here right now is it's a very strong move, so we expect a deep pullback and a retest of that level, right? We've talked about this many times before, where looking for range breakout pullbacks would be ideal. So sharp corrections are certainly anticipated here, but at the same time, we have to be prepared here for a trading range, right? Okay, and again, I think there definitely is potentially some money to make on the way down here as well. Let's talk about that. Let's go drill down to the tick chart. Again, tick charts will make everything easier. These are NinjaTrader tick charts. Now, I have no affiliation with them, but they have a great free version of their software these days. Just got to pay for the data. It's a great resource for anyone who's serious about futures trading. Now, on the NASDAQ tick chart, a lot of the same components, right? It's a very strong move up, looking for a pullback and a retest. That, of course, is a trading range, right? So anytime we see a break out of a trading range, we're anticipating that breakout pullback, right, and that run back up. I really like how that trading range, that high, lines up right around that bigger channel. Now, remember, we want to be kind of careful with buying too high right now, right? So if all we get is a shallow pullback, it's that trap setup, right? If we get that deeper correction, which again, I can't exactly tell how far that correction will go, but usually these corrections will be what I call a 1, 2, 3 move. They will usually go a little bit further than a measured move, right? We don't have enough information right now, but anticipate a two-legged move, but further than the measured move here, and that will likely give us, we'll know more about that tomorrow, obviously, once we know more information. Once we get that, then again, that momentum gets relatively bearish, right? Pretty strong there. What we do now is rope those bears in. And again, a better example of this would be if we get something like that, right? Where that measured move is busted down there, right? Now we're getting some bigger levels of support here. That will feel a lot more bearish as we go. So don't try to pick the bottom. We once, we twice, trap those bears in, failure, right, into that pullback combination and back to the high, all right? Now, how does this change if we go sideways? Does it change if we go sideways? It really doesn't. It really doesn't. If we go sideways up here, which is exactly what you'd expect, again, after a big melt-up market like we've seen over the past 2 days here, if we go sideways, that trading range becomes a magnet, all right? And there are really two scenarios that you want to kind of be prepared for if we do end up going sideways here. So the range itself acts as a magnet. Now, the easiest way to look at this is if we get a pullback below that trading range, we can use that classic failure into pullback combination, right? That failure into pullback combo. I'm obviously keeping things simple right now, but again, when you take my free trading classes and that link that popped up there in the upper right hand corner or down in the description, you're going to see a lot more examples of these failure into pullback combos, right? I can't teach all the details in these YouTube videos, right? That's why I have that free class for you guys to get kind of the nuts and bolts there behind the scenes. So if we do end up going sideways, then the goal is just find levels of support below that trading range and look for that failure, trap the bears in, use stops as fuel into that pullback combination, go back up to retest the high. Remember, now tomorrow's a Friday, right? So in a scenario like this, the first target is going to be back to retest the high, but remember, ranges love to rotate. So the amount we go below the range can be used now above the range, and that would be that kind of runner target that I mentioned earlier because Fridays love to run, right? So hopefully we can get something like that with our range breakout. Now, there's one other variation of this that you have to be kind of prepared for, and that is, let's say, for example, we go sideways here into a trading range, and oftentimes what happens is just to mess with us, they'll make a run up and then jackknife back down again, right? It'll be kind of like a fake out breakout, right, off the high. Now, I'm going to talk about the short side on this in a moment, but what I want you to be aware of in situations like this is that when you have a range and the market kind of head fakes off the high and fake out breaks of the high, remember, the amount above the range can be projected to below the range, and that will give us support. And then the second thing is that the momentum on a head fake like this can be very, very strong now for the bears. Now, if you recall back on the first chart on the S&P chart, we talked about that variation, right? In other words, if we do get that head fake off the high, that momentum turns. This is not the same situation any longer. Now it's a lot more bearish in the short term. So in these situations, you're looking for one of two patterns, right? You're looking for either a two-try failure, again, bears once, bears twice. Now, does that make sense, right? It makes sense why you look for two tries? You look for two tries in this scenario because you've got that head fake, that kind of whip off the high. These can turn into very, very sharp pullbacks off the high, right? So you'll learn that lesson, or you can learn from this example here. I learned that lesson the hard way many years ago. So whenever I see it kind of range bound and fake off that high, I wait for those bears to try twice. I give them the benefit of the doubt, right? I respect that momentum, and then I look for that punch right back up into that range. Again, target off at the high of the range, certainly try to leave that runner up to that high and potentially the runner right into the close there for tomorrow. The other scenario you want to think about too is, the other scenario would be if we were to see a range here and we get that head fake off the high and that sharp correction back down again. And again, I'll talk about the short side here in a moment. The next one will be that V bottom, right? That V bottom, right? Sometimes what will happen is you won't get that 1, 2. It'll simply V bottom off of that low and run back up into that trading range, right? There could be a lot of buyers waiting down here. And again, these are tough on the emotions because that little lizard brain, and right, our monkey brain will say, come on, Joe, get in. You're missing it, bro, right? And that voice in your head will say, just get in, get in. But remember, what's going to happen up here is all the buyers who who got in, they're going to be getting out, taking their partial profits. They're going to run out of gas, if you will, and oftentimes this will correct back down, and usually the best entry will be that bear trap. Just remember, whenever you're concerned about buying too high, right, which would be in this scenario, right, ideally you want to buy down here, right? But unless you're a big institutional size trader who can buy, right, and buy into those moves, which I'm sure some of you guys watching have the capital to do that. But for the rest of us, right, who have to pick our spots with a little more accuracy, I'm not in the business of picking that bottom, right? You might be, but for most folks, they're not going to make any money trying to pick tops and bottoms. So as it jumps off that low, you're like, shoot, I'm going to miss it. Don't chase after it. Try to buy as low as you can. And remember how this pattern sets up, right? Bears once, we go higher, bears twice, there's that bear trap. And again, right, the higher that range, and of course, the other side of that rotation, all right? So those are some scenarios I'm watching for right here on a potential range market here for tomorrow. Now, let's talk about short side trades, right? Short side trades. So first of all, disclaimer, with a market that's this bullish right now, we do not, at least I don't recommend, I won't use full size positions on short side trades, right? So I definitely do believe there's potential for a nice correction, and there probably is some money to make, right, on that correction. But this is not one of those scenarios where we go with a full position. It's a half size position, a quarter size position. If you're relatively new to trading, it's probably zero position, right? A lot of times the best position if you're a rookie is no position at all. The most reliable trade right now is that deep pullback and that retest. Okay, it can be very difficult to pick a top on this. What is the best way to short a top? Well, what's our problem? Our problem right now is we're so bullish right now. It's going to be difficult to get a lot of sellers, right, to take this thing short. We're not going to have a lot of bears in the market right now because we're so darn bullish going into earnings tomorrow and earnings next week. So if we can't count on sellers to help this market go lower, we have to find a way to use the buyers to help this market go lower. And to do that, we need some sort of catalyst with a stop run. This is where a crown reversal pattern comes in handy. Now, in my free trading classes, you guys are learning about failures and traps. Okay, the crown reversal pattern is going to wrap together both of these pattern setups. It looks like this. As we pull back, we want to start thinking about, again, not a great spot to be a buyer, right? Because we're way, way high up. The bulk of the buyers are probably going to be waiting down here because that's where they can get a small risk for a nice big reward. So if we can get some rookies to come in and foolishly try to buy into this high, let them try once, go lower, let them try twice, and we can get that trap pattern, right, off the high. This is the way you short a strong bull market. Now, again, these are not in a category of like A, B, C, D setups. These are C setups, right? So you don't want to take them on a full size position. You can do whatever you want, right? But if it's me, these are small size, half size, quarter size, maybe even no size if you're on a relatively, right, small account. We let the buyers try once, right? Try twice. Remember, guys, buyers want to buy low. Buyers want to buy low, right? They buy it once, they go lower, they buy it twice. The trap is necessary because if it's a bull market right now, what's going to happen as we go lower? As we go lower, who's going to come in? Buyers are going to come in to buy this thing right back up again, right? So we have to sell as high as we can, and that's why a trap. Remember, if you want to sell high, use a trap. If you want to buy low, use a trap. The crown reversal is the best way to do this, right? Now, we'll keep an eye out for that. Now, remember, think about it, right? It may be bigger. It could be buyers once, buyers twice, right? Just kind of keep that structure in the back of your mind, right? Buyers once, lower low, buyers twice, trap high. All right, that is the way you short this thing, whether it's a big pattern or a small pattern off the high. And again, make sure you sell as high as you can, because the lower we go now the more buyers are going to come in, rope those bears in, and try to go back up and retest that high. All right, now there's one more kind of variation of that, and that is a double top. Okay, double tops are a lot more reliable because now the buyers will have gotten paid, right? So let's say, for example, we get that two-legged correction, that 1, 2, 3 move. Let's say now we trap those bears in, right? We go back up, failure into pullback combo, and we take out that high now, all right? Mission accomplished, right? Buyers want to buy low, they want to retest the high. Mission accomplished. Can we all agree the smart money, right, the bigger players are buying the dips, right? They're not going to buy high right now, probably not after a big melt up, big market move we've seen over the past couple of days here. So think about who now is buying into the highs here. Rookies, right? Rookies will come in and they'll try to buy this thing into the high. This is where, again, we're very bullish at this point. So we have to respect those buyers. We're probably not going to see a lot of sellers up here, other than, of course, the buyers taking profit, because we're an overall bull market. So if I want to sell this top right now, I'm not going to be able to lean on sellers, right, as if this was a bear market. I have to find a way to use the buyers to help me get this thing turned over off the high. And this is pretty simple. This is where you look for that two-try failure, right? We know the buyers have all the momentum. We also know this is a horrible place to be buying. So rookie's going to buy right here. If I can get buyers coming in once, buyers coming in twice, I can now think, okay, their stops, right? Their pain is right below there, and I can look for that double top. I call these double top reversals. They're ultimately a double top followed by a two-try failure pattern, which of course is a variation of the failure patterns. You guys are learning all this stuff in the free trading course. Now, what you want is you want that nice juicy signal off the high, and then think about where the market probably wants to go. It's going to want to go where? Take out that low, right? That double top reversal, double top failure, whatever you want to call it, the high, right? It will drop back down to that low, okay? Now, profit comes off at that low. Now, remember, overall bull market. Could this be the beginning of a range? Absolutely. Now what do? Do we sell down here? Hell no, right? There's no possible way you want to sell down here. But you do hope that some people do sell down there, right? Because as they pull back now, bears get short chasing it. Bam, right into those stops and back up. And again, this may be how that big range ends up flushing out at some point tomorrow, right? So deep pullback, trap the bears in. Again, half size position, quarter size position, possibly no size position if you're new or in a small trade account with that two-try trap right off the high there. And then as they rotate lower, these will usually overshoot those lows a little bit, just enough to get those bears enticed into those shorts and enough to give the smart money traders enough to light those stops up for a squeeze back up to retest that high. All right, guys? So those are the key scenarios here for being a seller. The only other scenario where you could warrant being a seller would be if this thing pulls back, holds the moving average, rips and completely gives back the entire move that we've seen over the past day and a half here. That could produce a complete reversal. It is very unlikely, given the situation right now. We're more likely now to see that correction 1, 2, and then back up, right? Because we've just gone so far over the past couple of days. But hey, you know what? If we do get that big reversal, this is exactly what we have a trade room every morning. I'm pretty good at anticipating this stuff the night before, but tomorrow morning though, we'll see what happens tomorrow morning. If anything surprises us tomorrow, like the banks reporting tomorrow, we'll be in our trade room trading together, and we get together there every morning at 8 o'clock Eastern time. Now you've got the game plan. Now you've got the mindset locked in here for tomorrow. Remember, early in, leave that, right? To leave that runner, and again, keep on trying to shallow pullback traps, deep pullback failures. Be aware of that range, and don't be afraid to come back and watch the video again to get more practice, more repetitions ahead of tomorrow morning. Now, speaking of which, tomorrow morning, every morning, 8 o'clock Eastern time, we'll get together, trade this stuff together. If you're looking for a great place to come out and learn and trade along, you will love our morning trade room. I'll put all the membership links. I'll put all the free trading class links. I'll put everything down the description of the YouTube video. So grab those links and get started down there. Learn this strategy. Call the office if you guys have any questions. If you need help getting into the access to the free trading classes or any help along the way, don't be afraid to call the office. We got live chat here if you guys need help along the way as well. All right, guys, thank you so much for watching tonight. Hope you learned a bunch from the video. Hope you use this strategy to make a bunch tomorrow. There'll be no video tomorrow night. We'll come back to on Monday night, and we'll talk about earnings season as we go deeper in the month of July. As always, my name is Joseph. Thanks for being here. Be well out there. Be nice to each other. If I don't see you tomorrow morning in the trade room, have a fantastic Friday. Have a great, great summertime weekend, and we'll see you guys same time, same place on the next edition of our video newsletter. As always, be well, be nice to each other, and be here next time. Adios, amigos. Bye-bye for now.